Good morning and a very warm welcome to all of you. We are coming to you straight from the National Stock Exchange for a very, very special occasion. It's a milestone for Moneycontrol. Our subscription service, Moneycontrol Pro, has hit 1 million subscribers. That is 10 lakh subscribers. It's a huge, huge moment for us. And what better to be at the largest stock exchange in the country to commemorate this. It's a huge moment for us, obviously. Moneycontrol itself is climbing from strength to strength. We are the destination for financial news, business and markets. As we call it, we are the markets ki dhadkan. And it's a great moment and really happy to have all of you watch this very special show that we are coming to you live from National Stock Exchange. Now I'd like to call Nalin Mehta, our editor, Moneycontrol, to come and speak a few words.
Thanks very much, Mahalakshmi. We at Moneycontrol are absolutely delighted to be here on the floor of the National Stock Exchange to celebrate this monumental milestone of Moneycontrol Pro hitting 1 million paying subscriptions. By breaking through this ceiling, Moneycontrol has not only cemented its position as India's largest news digital subscription platform, we are now also among the top 15 globally. So we at Moneycontrol and at Network 18, which we are part of, are immensely proud that these subscription numbers actually put us neck to neck with global media platforms like the Financial Times, like China's Caixin and Barron's. I think it's only fitting that we're celebrating this here on the floor of the NSE as India's #1 platform for business, finance, and markets news. What better way to celebrate than on the floor of the biggest boards in India? I think, so Mr. Chauhan, thanks very much for making this happen. Big thank you to you, sir. The fact that 1 million people opened their wallets for us, I think speaks a lot about the trust and confidence they've placed in our products behind our paywall, both editorial and data tools. We're deeply humbled by that as we take huge steps forward as a fintech platform. On our platform now, users not only get insights into stocks as they've always had, but they can also buy FDs, they can take loans, they can track their portfolios, they can track their credit scores and their bank accounts. But the thing is that we'll keep improving these products, we'll keep evolving. And the one thing we can promise you is we've only just got started. Thanks very much.
Thank you so much, Nalin. We are just going to ring the bell, the gong at the National Stock Exchange to usher in this huge moment for us. But before that, a quick thing. Later in the show, we are going to have market experts and the best market minds actually, and the movers and shakers in the markets to discuss the future of equities, the power of Indian equities and emerging trends. Samir Arora from Helios Capital, Rashesh Shah from Edelweiss Group, Ashish Chauhan, of course, the chieftain of the largest bourse in India. So we will have all of these people join us for this discussion later. But before that, let me call Ashish Chauhan, Managing Director and CEO, National Stock Exchange, to join us. Also Rahul Joshi, CEO of Network 18. Please join us on stage. Manoj Nagpal, Business Head for Moneycontrol. Javed Saeed, Chief Content and Strategy Officer. And NSE CBDO Sri Ram Krishnan. Just in a few minutes, we will ring the gong. A quick chat, Ashish. You've done this many times. How important is this? What would you like to say on an occasion like this?
It's a great occasion to see that almost 1% of Indian investors are actually also now paying for the information. There was always a belief that Indians don't pay for information nor for services. I think that shows the increasing prosperity of the India and of course the Indian capital markets. I think we have come a long way, and congratulations to the entire Money Control Pro team that you have, in a way, with your hard work, your understanding, also the way you do things, that has created that trust that people are willing to pay money, especially in India, for content, and that's a great thing. I think the amounts, the numbers in India are like way beyond what the world has seen. In some ways, probably a million number may not be there in FT or WSJ or anywhere else in terms of the paid customers. And that's where I think, and that's true with NSE too. Uh, we service directly more than 100 billion customers. That's 10 crore customers. And again, that's not seen anywhere. Today, on a good day, we would get 2,000 crore orders in a day in 6 hours, which is like 25 times then more than any other exchange in the world. The nearest exchange is now literally 4% our size, and so on and so forth. So, and similarly, number of trades we do are almost 30 crore trades on a good day, which is basically 50% of all trades in the world on many days. So those are the numbers which India is just coming up and able to produce. I think the sky is the limit when we go forward, because India is just the beginning.
Sure. Rahul, would you like to say a few words?
No, thank you, Ashish, for this opportunity. We are indeed proud that we are standing here and celebrating the moment with you all. I think it's been no mean achievement. All congratulations to Money Control and the team. When we started, people were not even giving us 30,000. They said if you reach 30,000, it'll be a huge landmark. We did that in just about 6 months. And from then on, we've been on a roll. Thank you all the investors who have reposed their faith and trust in Money Control. And like Ashish said, the NSE story is an amazing story, and we are just a microcosm of this entire India story. So thank you, everyone. Thank you, Ashish. Thanks, everyone.
Sriram, would you like to say something about how technology has really changed during this time, and how important has that been?
So there was a time in
Very quickly.
Yeah, sure. There was a time when I began my career, for example, where
7, 6, 5, 4, 3, 2, 1.
That's a great moment. 1 million Money Control paid users.
Yeah, just to continue, there was a time when, for example, we thought the information was only available with brokers in Mumbai, and the rest of the country was maybe lagging behind by 1 day or even more in many cases. But today, the same information is available. We've democratized the entire ecosystem, and with the 200,000 plus terminals that NSE has, and we penetrated 99.85% of the postal codes of India. So this makes it possible for many ecosystem players like Money Control to thrive and flourish, right? So we are very optimistic that 1 million is just a starting point, and there's much more to come.
Sure. Thank you so much, gentlemen. We'll just have a quick AV on Money Control, after which we will have the panel discussion. Stay with us.
When Money Control Pro began its journey, who would have imagined that a paid digital service will cross 1 million mark? Heartiest congratulations to Money Control Pro in achieving this milestone. It's testimony to quality of your research, ease of operating your app, and most importantly, the reward which one gets while using the same.
In this age of free content everywhere on the internet, it is amazing to see MC Money Control Pro get 1 million paying subscribers daily. I mean, I've been a follower I'm an user of Moneycontrol for a very long time. Congratulations on this great achievement.
I take this opportunity to wish the Money Control team heartiest congratulations on this amazing achievement of reaching 1 million paid subscribers. I wish you many, many, many more years of continued and great success.
This is a fantastic achievement. As a regular user of the site, I've seen how the content has improved. And over the years, it's become the go-to site for anybody who wants to keep track of the Indian markets, the Indian economy, all the stories, all the analysis. So congrats to the team. All the hard work that has gone into that has allowed you to reach this 1 million mark. And I'm confident that this is just a milestone along the way to even future growth and many, many years of delivering great content and great analysis.
Reaching 10 lakh customers on Money Control Pro is quite a feat. I've always enjoyed the depth of coverage and the analysis that you have. And this is just a milestone that will bring many, many more. And best wishes to the Money Control team for reaching this milestone and for the future.
A very hearty congratulations to the Money Control and specifically the Money Control Pro team for achieving this very significant milestone of 1 million subscribers. It is not easy to achieve 1 million subscribers in a paid capacity in over the internet. So, and I think that is a testament to the value that is being provided to customers because they are able to take money out of their pockets and spend for something. That implies they are finding value in that particular analysis, which is fairly in-depth, incisive, and obviously adds value to the people. That's precisely why they pay. I believe this is just the start. This platform will continue to grow and do well.
In India, it's really difficult to make people pay for premium stock market content, for high quality equity research, and therefore just stunned and pleasantly surprised to hear that so early in its existence, Money Control Pro has hit 1 million users. Congratulations to everybody at Money Control Pro.
I'm here to share my experience in Moneycontrol Pro. As I'm using this from past 3 years, it has given me good returns on my investment. Usually, I'll be referring more current news, current updates about the market, how the market will be, and it also shows good results on my trading as well. So overall, I'm very happy with the Moneycontrol Pro. So I'll encourage everyone to give it a try.
The news is pretty comprehensive.
Welcome back. Considering we are commemorating a big milestone for Moneycontrol Pro, 1 million subscribers, it is only befitting that we talk about the power of Indian equities, the power of the Indian investor, and emerging trends. We have with us a very good panel of experts. Samir Arora from Helios Capital, Rashesh Shah from Edelweiss Group, Ashish Chauhan, MD and CEO of the National Stock Exchange, Saurabh Mukherjee from Marcellus Investment Managers, and DP Singh from SBI Mutual Fund, the largest mutual fund in the country, which just crossed the 10 lakh crore mark recently. Thank you so much, gentlemen, for making time this morning. Ashish, let me start with you first. Whichever way you look at it, our markets have done exceptionally well over the last 5 years. And I'm taking last 5 years because that also, in a way, tells it is the journey of Moneycontrol Pro, because Moneycontrol Pro as a service started in 2019. And I quote some figures. Market cap has gone up from $2.8 trillion to about $4.68 trillion. That's more than double in dollar terms. In rupee terms, obviously, it's gone up a lot more. Now, we are the 5th largest nation in terms of market cap. We were 7th largest about 5 years ago. Cash turnover has gone up from 36,000 crores to about 1,22,000 crores. F&O turnover has gone up from 9,50,000 crores to about 400 trillion, 400 lakh crores. Demat accounts have gone up from 3.59 crores to 17.5 crores. Demat account openings per month used to average around 3.5 lakhs. Now it is 40 lakhs. All of these numbers obviously tell us that from any dimension you see, and of course, in terms of returns, we have had fantastic returns. Whichever way you see, whether it is turnover, the participation, the kind of volumes we see from outside of top 5 cities, the markets have grown. One easy thing to say is that investors chase returns, stock markets have done well, and therefore there is a lot of appetite. But in your perception, what are the key defining factors that you would attribute to this kind of stupendous rise that we have seen?
No, in a way, as you rightly said, 5 years, I would say 10 years, because that's what, in a way, there was a change in policies, change in a way of doing things in, say, 2014. But if you can take it as 2019 also, when Money Control Pro started. The way I look at it is, why do stock markets work? When you measure the markets from the flow, that is the trading volume that happens, I measure it in a way that how does a market help the society create wealth? The basic purpose of the market, although many of us, or most of us, feel that purpose of market is trade and trade incessantly. That is not true. The purpose of the market is actually to do price signaling of assets. That is the philosophical purpose. How we achieve it is different, but what it does is that the assets get created, and today there are two ways in modern economy to create wealth in an economy. Channelize savings of an economy into productive capital. One is what we call intermediation, where you go through banks, put money into banks, and then banks on lend. But if the other side doesn't pay back, bank still pays you back, and that's the pretensions. That is the way we think it should happen. But the other side is called disintermediation, where you put money directly into a business. And there you need to have a trust of people who are putting that small little 1,000 rupees sitting in Srinagar, sitting in Jorhat, sitting in Dibrugarh, putting that 1,000 rupees in a company working out of Coimbatore. They are not never going to visit that company, but they have a complete trust in India's parliament, India's judiciary, India's ministries and regulators and stock exchanges. But more importantly, they have trust in India's entrepreneurs. That entrepreneur is going to work hard for your 1,000 rupees, her 1,000 rupees. And for me, that trust is what has got created. Usually, I mean, if you read the economics books on markets, it is very clear that countries with low per capita income cannot have good markets, thriving markets, because poor people don't save. And if they save, they don't trust even their brothers with their money. That's why they put money in gold and all. India is an outlier. With $3,000 per capita income, we have now the fourth largest, you said fifth, because you take Bloomberg data, and Bloomberg after 1998 should have merged Hong Kong into China. At least I did, and rest of the world. But Bloomberg still wants to project that Hong Kong is separate from China. But otherwise, India is fourth largest, and the market capitalization is $5.6 trillion, not $4.8 trillion. But besides that, there is no country in the world with $3,000 per capita income, which is our style of markets. $6,000, no market. $12,000, no market. $24,000, one market is there, whose name is China. When markets go down, government has to go and buy shares. You might have seen recently. In India, have you seen that in last 25 years? So that's why I'm saying this is a market of the people, by the people, for the people, but it is a trust between entrepreneurs and the investors. We all, including you guys, we or anyone else, we are just facilitating that. And that is what all of us need to understand, that it's very difficult to create that trust and very easy to give away that trust, right? So nothing should be done by any one of us who eat out of this, right? We are literally drinking out of the same pond. and anyone poisoning that pond, we'll all be hurt, right? So that is where I think this trust is so beautiful. I always say that over last 75 years, 77 years of independence, what India has achieved is trust in its entrepreneurs. And it's so beautiful that somewhere India has become a trustful nation, right? It's a very, very beautiful thing that has happened.
DP, I want to come to you because you crossed a milestone few months back, 10 lakh crore, and you are perhaps present in every nook and corner of India, should I say? You're distributed everywhere. Tell us some anecdotes, numbers, things that demonstrate the trust that he's talking about. What is your hope? What do you see as an opportunity going forward? And what are the challenges?
No, I absolutely agree with what Mr. Ashish Chauhan has said. Reaching out to every nook and corner and selling trust rather than selling a product. When our people has the trust in the entrepreneurs of the country, and then channelizing that from the farthest part of the country and bringing it to the manager who is doing the complete research and investing every single penny of that person into those stocks. This is something which has happened in a very, very beautiful manner. Today we take pride that in the all the, especially the hidden uh, everywhere you talk about Northeast, you talk about Kashmir, which he touched about. We are the market leaders because of the brand, because of the trust. People already had trust in the brand. People have channelized money through that channel into this. And today, when we are having more than 1.5 crore SIPs customers into the market with the ticket size of less than 2,000 crores. Just to give you an example, the small cap fund, which is ours, and we don't take pride that we are giving the highest returns because we choose very, very good companies, has got 2.5 million investors every month coming with the ticket size of less than 2,000 crores. 25 लाख लोग जो हैं जो उसमें पैसा डाल रहे हैं हर महीने, और we are not accepting lump sum money, still we are getting 700 crores every month. Actually it's 3 million, almost 3 million now. So 6 to 700 crores are coming through that. And the responsibility of that and the intermediation which we are doing as the overall ecosystem, where the stock exchanges, where the people like you who are giving a lot of information to the people, that's working very, very beautifully. And this is, I think, global success story. And we are proud to be part of this.
Absolutely. Samir, recall how from your days at Alliance, when you would go into distributor meets and stuff like that, to the road shows that you do, perhaps now, I don't know if I should say road shows, but the same distributor meets, how the mood has changed, anything that really strikes you in terms of how remarkably it's changed for the better or worse? Largely for the better, I presume.
Oh, definitely it has changed, because when I was in Alliance and we were supposedly the biggest mutual fund out of the new startups, I mean, excluding UTI and SBI and all, our assets were less than what we have in Helios now in less than 10 months. And I can see this thing of trust, you can call it, or because of the things set up by the mutual fund industry over the years to get that confidence and whatever protection, that we are in our 11-month history have got maybe investors from more than 300, 400 cities. And for us, I can see broadly that, people investing 1,000 rupees after the first 5,000 rupees. We are now about 0.3% of their size.
Yeah.
So we hope that we have much more room to grow than the overall this thing. But it is visible everywhere.
So this time it is
but
for
this
real.
Time,
this time the confidence that is built up in equities, the trust that we say. Every time in a bull market, one tends to believe this is real, but ultimately you're disappointed.
By the way, on
because
that
the
point, if I may say, on that point, I may say, because that is my favorite point, that don't look at last 5 years data of the market to say that this market has done very well. If you look at last 3 years, I'm talking about performance only. You look at last 3 years or 7 years or 9 years or 10 years or 15 years or 20 years, it's the same, which is 15, 16% per annum. Last 5 years distorts it because it looks like 22% and all. You just make it last 7 years for Nifty, for NSE 500. It's all the same. Therefore, I don't think it is out of line. But quickly on this Alliance thing, in those days, there were less distributors. And so I would go and talk to 500 people, 1,000 people who were end investors.
Right.
So it was more fun. actually, than talking to a distributor who's acting tough with you.
Right, right. Rashesh, again, building on this point on trust, the retail investors have definitely reposed a lot of trust in the market. One thing that sort of is a bit unnerving, I don't know, maybe that's too intense a word, but one disturbing trend is this promoters selling out. And that's been continuous over the last 3 years at least. Do you see that as a concern? As a skeptic, I would say this is distribution. As an optimist, I would say this is democratization. As a realist, what would you say?
No, I think I would say if you see the overall trends, and actually that is very important because though we talk about the last 3 years and 5 years, I have been in markets for close to 35 years. I remember when I started my career, the index was about, the BSE, there was no NSE at that time. The BSE index was about 800, which is now more, close to 80,000. So having seen that, I think getting a 14-15% and almost after tax kind of return in the market is what it is given. So what we are seeing now is the 30-year journey. It was 30 years ago, NSE was formed and SEBI was formed. And I think that is the journey that we are seeing, that now India was a very banking centric financial services system. Now we are achieving a bank and the capital markets, as complementary channels for converting savings into investment. Having said that, if you look at even today, the promoter holding in Indian companies is a lot higher than the global averages. And I think as you want to have more institutional ownership, more governance, more wider breadth of really participation in this entrepreneurial wealth creation journey, the promoter stake coming down is a good thing. I think if all promoters own 80% or 75% of all companies, I don't think the participation would be as wide. So look at companies like Infosys and HDFC banks and all. Actually, they are no longer promoter-held companies. They are institutionalized. We have ICICI and L&Ts and others. So eventually, as companies get large, as markets get large, some distribution is required. It also promotes a lot of institutionalization, stronger governance, and then the companies are really held by the investors, both the retail investors and the institutional investors. And that builds a longevity to the companies rather than be. So companies are started by promoters, they're scaled up by promoters, but the long-term evolution in the marketplace, if it is with a wider set of investors, I think that makes it stronger. So I, for one, do see that as we're getting a lot more SIP money, a lot of money coming into mutual funds and others, India had an habit of savings, but we did not have the habit of investing. I think we are now cultivating the investing habit. It comes with its own caution, and I'm sure people like you will educate investors how to take the long-term view and the volatility and all. But this investing habit is a good habit to have. But this investing habit also requires that companies get more and more institutionalized.
Sure, sure. Saurabh, on the same point, I was talking to Manish Shokani day before yesterday as part of our Diwali conversations, and he put it beautifully. There is also selling, just like Indian promoters, a lot of selling from MNCs. We constantly say that the world is looking at India and buying India. Equally, the world is also selling India. There is the Whirlpool from the US, the BAT from Britain, Singtel from Singapore, Hyundai from Korea. So any country you name, there is an MNC from there who's selling stock in India. Are you concerned about this trend?
No, I think, look, I mean, cost of equity, it drives a lot of behaviors. And if I am Hyundai or if I am BAT, and I can see that the Indian market, courtesy the wonderful achievements of the NSE, courtesy the amount of money that giant MFs like SBI MF are raising, if the Indian market is giving me cheap equity, then I, as a MNC, I'm happy to partake in that. And I think this journey will continue. I think we're just at the beginning. My reckoning is Indian household wealth is roughly $10 trillion. And out of that wealth, Mahalakshmi, out of the household wealth of $10 trillion, at the moment, only a trillion and a half is in financial assets. 90% of Indian household assets are still in physical assets. And we're only at the beginning of that journey. When India becomes a second world country, say $5,000, $6,000 per capita income, I think the ratio will be 80-20, right? So 80% of our assets will be physical, 20 will be financial. Therefore, I think in the next decade or so, we'll easily see $1 trillion extra being added to domestic financial wealth. And therefore, more than the foreign investor, the domestic investor will pour money into the market via mutual funds, via PMSs. And often the MNC might say, let me take some chips off the table. And that's perfectly fine. That's part of the evolution of the market. Kudos to Rashesh rightly mentioned, kudos to the folks who created SEBI 30 years ago, the remarkably far-sighted people who created an NSE. I remember I was in school in the early 90s, and my school, this was in the suburb of London, they used to take us to watch open outcry trading in London in 93, 94. In that era, to move India to a screen-based trading construct, remarkably far-sighted. And I think we should also give a shout-out to the entire ecosystem. It created Jandhan, Aadhaar, Mobile, UPI, and the India Stack. I think without the creation of the India Stack, this sort of democratization of wealth wouldn't have been possible. So a lot of hard work, generations of hard work has gone into creating the defining moment for NSE's success, SBIMF, and of course Moneycontrol Pro's success.
Sure, well said. So Ashish, building on the same point, you had a big listing with Hyundai. What do you see over the next 3 to 5 years? How do you see the supply side? How much do you think our markets, the primary markets, will add to our total markets in the next 3 to 5 years?
In a way, if you look at your earlier question also alluded to saying even foreign companies are coming and listing or selling their shares in India. It's also that when a country becomes prosperous, it tends to also do a little bit of investments outside, or what I call capital exports. And in some ways, this is what it's a sign of India's exports also. Like a lot of companies of Indian origin, I recall Samir and Rashesh will also recall in early days, Infosys raised funds, ADRs from US, and we were all very happy saying Indian companies are raising funds from abroad. And that was, in a way, Indian companies getting their capital exported into India, right? Because that country was prosperous, right, and we were not. Today also we are not that prosperous, but we have become tiny bit little prosperous compared to what we were 20, 30 years back. And that's where, for me, these are all dynamics. They play out in different ways because like capital controls in India ensure that usually people are not able to take money out. So there are ways which companies will try. But effectively for me, it shows that Indians are becoming more confident about their economy. The other question which at least I got from you saying is this time real? For me, there are going to be ups and there are going to be downs. Just because 5 years you have not seen too much of down, but in 5 years you've also seen COVID, right? And it has seen probably 60% drop or 40% drop. So there are going to be ups and downs. That is the nature of the place you work with. That is, the volatility is immense. And that's what Russia said, that education has to be the mantra for, naturally, for you guys and us, because that's our job. But effectively, somewhere India will have to continue to understand that if India has to grow in the direction that is trying to grow, it requires, earlier, you required huge amount of capital to create larger businesses. When I started my career 33 years back, I used to be a banker like him. And we used to put in a lot of money. And most of those companies are not to be seen today because China became much larger in industry and they killed all. Rest of the world's industry, including India's. But basically, the modern situation over the last 30 years has evolved that you require little capital, lot of exposure, larger markets, and a lot of hard work. And that's where post-Infosys or post-Wipro or post-TCS, we created a framework, which is what I call capitalism without capital, or capitalism with very little capital. And that's what the exchanges get you. That today, India doesn't require, well, of course, you require to put in a lot of money for infrastructure, but otherwise, the newer age companies don't require that kind of capital. You see Zomato, you see Swiggy, you see any other companies which have come up over the last 5-10 years, Nika, they require much lower capital to begin with, but they are able to create immense wealth, right? And that's what, if India has to grow over next 70, 80 years to become a rich country, which India has a chance today, then it has to basically grow on the back of a market for capital. It requires little capital, which today with 10 crore investors, 19 crore investor accounts on NSE, they are able to put in small little money, even in IPOs. Like yesterday, we had, you said Hyundai, right? They're the largest IPO. And small little people are putting money. They had like 15 lakh investors on the first day who had been allotted. And that's where there are no other countries. I mean, America also doesn't have our kind of IPO market. Their market is they give it to 10 merchant bankers, and then whatever happens, you don't know. Here, every investor knows what happened to his or her application and why, right? And so we have created a much more transparent stock market in terms of transactions processing, but also in terms of corporate governance. And for me, next 70 years, next 50 years, next 23 years till 2047, India is going to grow on the back. There will be ups, there will be downs, but this is the place
Sure.
where India is going to grow from.
Sure. On the supply side, Samir, where do you stand? There is this number that Ashish Gupta from Axis had put out that since April 22 till now, we have seen about 5 lakh crores of paper come into the market. Despite that, the market has done well. And the purchases from mutual funds, net equity flows, were about 2.6 lakh crore, like half of that. In the next 3 to 5 years, if you consider all the private equity based on a 7-8 year kind of exit, you would have, and other IPOs, mandatory papers that need to come into the market, that number comes to around 6 lakh crore. Do you think the market can absorb? Is this a good thing or a bad thing?
I think it's a waste of time to do this much analysis, because if the market can handle it, then it will come. If the market cannot handle it, the next IPO will not come with that style. What I mean is, these private equity guys don't have to come literally in October of this month. They could have come in November of next month, a year or whatever,
They've come because
depending on the market. So the market is good for whatever reasons, including confidence, including flows, including that the world is doing well, and therefore people are preponing, they're selling, and all these MNCs who sold their stock, they must all be fighting with each other, because all those stocks are up 50-60%. That why were we so early in this game? Point is, these things won't matter. It's self-adjusting, according to me. It's not that they have to sell and Indians are not willing to buy, but they will still sell, because most of them are financial investors. Talking about the private equity guys, they can push it forward, push it back. It's basically, the market is good, they will come.
Fair enough. Ashish, one more question on the, we were talking about trust for quite some time. There seems to be a feeling that some kind of unease with respect to SMEs. There are a lot of people who say that there are a lot of excesses getting built there. And the regulatory framework is a little loose. Where do you stand? How do we do this in a way that you don't throttle growth, you don't break the trust of the investor, at the same time you give that opportunity to SME to come and sort of tap the markets?
So again, old timers would recall 93, 94, lots of companies, small times, they came, raised funds, and then disappeared. Gujarat Ambuja Protein, Gujarat Ambuja this, Gujarat Ambuja that. Many of us who have some white hair would recall, and they are now known as vanishing companies. So both the exchanges in late 90s stopped taking any prospectus for small companies. In 2010, government set up a committee and came out with a report which said, small companies, why are you stopping? Let them also raise funds. And we were very reluctant, because when people make money, it's their brilliance. But when people lose money, they come and blame the exchange or SEBI, right? And so we had to say that we have this problem and you guys have to tell us what to do. And finally, after a lot of persuasion, both exchanges started the SME segment specifically in 2012. And that's where last 12 years, there are 1,000+ companies which have got listed on SME board. SMEs are highly risky. Many of them do not have stable business models, and they many of them may not survive well. But whoever survives may be able to give you much longer, much larger sort of returns. Again, they will recall, even DP will recall, Infosys, when it came, it was SME, right? It was, even that industry was not known. Issue failed. Underwriters had to actually subscribe. And then it took off, right? So there are going to be companies which we see, many of them over last 10, 12 years have come up, but naturally where the prices go up too much in a continual bull run, there is an issue where many more such people come. Some of them maybe fly by night, and we need to be careful in not allowing. But again, it's a pact, it's a contract, it is an investment by the investor into the company, and investor has no obligation, never, to invest in that company. So if the investor studies, and of course Moneycontrol Pro gives good data and also tells them what to do or what not to, give good recommendations, people will not invest in those bad companies. And that is what I would say, that exchange's role is to facilitate. Of course, there will be regulations, and we'll try to also update. I think SEBI also is going to come out with newer regulations in December for consultative paper. But effectively, it's your money as an investor. Study hard and don't invest just because somebody gives you tips or somebody says this SME, so it's going to go up 100 times. No. Last few SMEs have not gone up even 5%. Many of them have gone down 5-10%. So as Samir said, that finally, if the market is taking the sort of equity, they will come and sell you. But it's your choice. It's your money. You need to study well. And of course, media has to also play its part, because when prices go up, media is saying everything is going to go up. When it goes down, they start blaming again the regulators. So somewhere they will have to also play sort of a moderator's part going forward.
But as an exchange and as a regulatory framework, do you see any changes at NSE? Are you doing anything differently using AI or anything that sort of makes this whole ecosystem a little more better?
What we are doing is slowly increasing the barriers to entry for SMEs. So we have slowly ensured that there is a free cash flow of having companies which are coming into SME market. And there are many main board companies which do not have free cash flow being generated. But in SME now we have made it compulsory. We have made many such things compulsory. Many of them were using or trying to use SME listing as a backdoor entry into the main board. So that has been stopped by increasing the bar for going from small board to main board, and minimum 3 years sort of track record and other things have been put in. So slowly we are increasing the bar to ensure that there is a sort of scrutiny at our end, but we are not the investors. We can only do so much. It's like you telling traffic police that why did that person drove at 150 kilometers per hour and you did not stop? Because traffic police job is to basically ensure that there are rules on driving on the left side in India, driving on the right side, and then putting railings and other things, and also the street lights and the signals and all. But if you say that drivers are not responsible or cars are sort of not having good brakes, somewhere we are missing the point, right? So that's where I'm trying to reflect back the mirror onto media also, saying kindly look into what you guys need to do also.
Absolutely. Rashesh, on investments, there is this constant debate that we've heard over the last 1.5 years, that because of this rise in equity cult in India, savings SIPs are taking away from bank deposits. Where do you stand on this? Do you agree with this logic? And how do you see it playing out? And do you worry that from a policy perspective, will we shift or tilt this against equities at some stage?
See, I think it is actually, for anybody who understands the financial system, it is a complete misnomer that because I'm investing in an IPO, I'm taking money away from deposit, because that same money I invested in the IPO is getting deposited back in the bank. When my company gives me a salary, if I take that salary and invest in the mutual fund, it is again going back in the banks only. So eventually the deposits stay in the banking system. They might be in current account, savings account, FDs, and all that changes. However, I think the larger point, and it is actually an interesting point, because I think there are two things happening in India at the same time, and it also relates to this export of capital and all of that. I think in the last few years we have become capital self-sufficient. It's the same thing happened in food. About 30 years ago, India became self-sufficient in food. We have always felt we were not self-sufficient for capital. We needed to import capital all the time. I think last 3-4 years, if you look at the data, we are becoming self-sufficient in capital. We have almost $1 trillion of household savings, give or take a little bit. This is a lot of capital, and the reason we are exporting a little bit of that is also now we have enough capital.
Right.
But when we have enough capital, it is also looking for good yield, because thanks to all of you, investors have also got fairly sophisticated. They've understood uh, how much I'm earning after tax on a bank deposit versus what I earn in the market. There's a 30 years of evolution of the markets and the returns available for people to see. So given all of that, I think the relative attractiveness of investing in a bank deposit is going down, and the relative attractiveness of investing in the markets is going up. But it's a constant adjustment period. As I said, we need banking system, we need capital market system. It's not either or. And this adjustment will continue to go on, and it will go on because we were heavily banking oriented earlier. If you go back 30 years ago, your only option was to keep all the money in the bank. So I think we are going through the change. I don't think the capital market is taking money away from the bank deposits. The color of the deposits undergoing a change. But overall, we need to understand that we have a lot of capital. In fact, we have more capital than we can smartly invest. And that's why, if at all we talk about cost of capital is cheaper in India, and that's why Hyundai doesn't IPO in India. The fact is we have more demand than supply of good quality equity paper. So idea is to address that rather than say, how do we get more people to go back to bank deposits?
Right.
I also think that banks will have to also create capital market capabilities. All over the world, if you look at all banks, they are both banking and capital markets. India, we have this artificial divide between capital markets and banks. I think the convergence will happen the next 8-10 years. The convergence, we obviously have examples of State Bank of India and SBI Mutual Fund, but I think more and more we'll see the convergence of banking and capital markets as we go along.
Sure. Samir, you were most vociferous about your views on long-term capital gains being increased. Do you worry that if this perception about bank deposits, equity investing coming at the cost of bank deposits will tilt the equation against equities at some stage?
I think we are getting carried away that we have enough capital. Even his point, I totally disagree. Every company that has been created in private equity is nearly 100% foreign capital funded. We don't have that risk capital, and overall we need much more capital. It is not enough to say we are growing more than others. We are growing much lower than what we should grow to really change things. And so I think this capital gains tax on foreign investors is one of the reasons why the market is like it is. Because currently, if you look at 20-25 years returns in dollars, the US market and Indian market have the same returns if you do it post-tax.
Yeah.
We keep talking about pre-tax because the index is pre-tax. But now everybody can see that it's a big leakage. If you look at the ETF of India, which is a foreign ETF, which is called India US, it has underperformed this year the index by nearly 500 basis points or 5%. The index up 20%, that ETF is up 15%. How long can we will keep telling the world, our market is up 20%, but that poor guy sees 15. And the second thing is, not one country in the world, and there are maybe 200 countries, charges a tax to foreign investors. So it's not that, we are playing a thing. Plus, for me personally, I am in the mutual fund business. I am a beneficiary if taxes are high. So I have both businesses now. Therefore, it is not me talking me. It is just wrong for India to get so overconfident that we have enough capital, we have these investors, we don't care. We should care.
No, so that is foreign investors' perspective. From an Indian equity investor's perspective, do you think it makes a difference at all? Are people really thinking that far, the retail crowd? And I'll come to ask the same question to Saurabh to understand the high net worth individual family offices. How do they think about it?
No, there are two points of it. One, of course, the savings. People are now saving. They are putting money in bank deposit. They are putting money in other coupon products. They are putting money in the capital markets also through mutual funds or directly, whatever they are doing it. But that system has got set in. They are not worried about what foreign investors are doing because our see flows are more or less certain now with 25,000 crore of SIP money coming and another 10,000 crore of institutional money, including what you call the EPFO money or the insurance money coming into the market. Almost, we are talking about almost $4 to $5 billion coming every month, which is huge money coming into the market. Now, I think not from the investor point of view, but from the structural point of view, there we feel there is an issue because at Nifty 50 we had BSE 30. I think we need to the base indexes need to be 100 stocks, not 50 stocks or 30 stocks, because a lot of institutional money is coming into those 30 stocks. There's a concentration risk. I think as a structure we need to work on that. Today, the EPFO subscriber who is getting 500 rupees out of his salary, going 500 yard down in the when and pick up the call, their 500 is put in the market, right, through aggregator. And out of that 500 rupees, 25% is going into two stocks. Is it the right way of looking at things? I think this is a point to ponder, and I think we need to do some structural changes on this. This is something we feel. And when we talk about 5 crore investors or in mutual funds and so on and so forth, actually we must always understand there are 12 crores, 120 million APFO subscribers. Even if you say that 50% of that is discounted, they are inactive or something, still we have those 6 crore investors who are putting money every penny every month into the markets. So the numbers when we talk about, but yes, foreign investors will keep on coming and going. When we look at the outflows, we are making hue and cry, so much money has gone out. But what is the percentage? Of the total FI money, only 2% has gone out. And people will book profit. That's the structure of the market. People will come in, people will go out. But we are very, very safe now because the internal liquidity is much more and we are getting very steady money in the markets.
Sure. Sort of the same question. So, from a family offices, high net worth individuals' perspective, do you see the kind of participation we have seen, inflows we have seen into the markets over the last 3 years? Do you see that continuing?
So I think, as I said, because there is so much household wealth still in physical assets, I think the argument is overwhelmingly in favor of rich households, HNWs, financializing their assets. But in the context of this whole CGT debate, if you have, say, an MF construct where churn is tax-free, and then you have a PMS construct like Marcellus. Indeed, I think the EPFO is probably the largest investor in PMS. And in the PMS construct, you're taxing churn at 20%. You're obviously creating a disadvantaged construct. The PMS construct is disadvantaged courtesy the 20% STCGT. And I think the way forward would be, we need to think about something along the lines of the 401k construct, where whether it's a rich individual or it's a EPFO subscriber, we create a tax-free savings account, where you explicitly save for retirement. And in that retirement savings account, I think we need to consider giving CGT exemption, because if you are paying income tax on your salary, then you're investing in the stock market, and then you're paying STCGT at 20%, it becomes somewhat perverse. I can see where I think the Exchequer and the government came at it. The Exchequer's point of view, I think, is corporate tax rates are 25, income tax says 30.
Yeah.
Why should CGT not also approach that rate? But the only snag in that argument is often people are paying double tax. They're paying tax on their earnings, and then they're getting STCGT'd out. And I think at this stage of development, we're still a relatively poor country. We're amongst the 50 poorest nations in the world. There's also another dimension. I published a book earlier this week on how India is changing, right? And in Beholder Leviathan, I've explained that the biggest rise actually is women investors. In urban areas, women now have more money than men in their bank accounts. That's RBI data. They have more bank accounts, and increasingly, from what I'm seeing, the MF data is also suggesting women investors are now increasingly outnumbering men. So if you have a new constituency coming into the market for the first time, do you really want to say, pehle aap income tax bharo at 30, then pay CGT at 20? I'm not so sure that's going to encourage the democratization of the stock
There's
market.
only one glitch there because I think some people are pointing out this women thing is actually a misrepresentation because it is for tax purposes that men have bank account in their wives' names and they trade through their wife's name and so on. So that's another story that is going around. Yeah. Sorry, you were saying.
No, I was saying an STT he forgot in between.
Tax. So income tax, STT, and CGT.
So that's all we have time for. But one last round of closing remarks, Ashish. From a milestone perspective, over the next 3 to 5 years, where do you see NSE? India in terms of market cap, NSE in terms of new listings, number of listings.
We are like a traffic police, right? So how much traffic comes on our way, I don't know. And we should not have those targets. We should be able to handle all traffic that comes our way in a fair, efficient way. And that's, we are frontline regulators, right? So we are not a business where you have 10 million and then 100 million targets. We don't work on that. Of course, we have achieved way beyond what was envisaged during our founding time. That time, total India, 1994, 3rd November, that is exactly 30 years back, we started operations on Diwali Day evening. That time, India's market cap was 4 lakh crore. Today, it is 460 lakh crore. That time, there were 1 million investors. There are 10 crore unique investors, although we keep on saying 15 crore DP accounts and 17 crore broking account on, or 19 crore broking on NSE. It's basically 10 crore individual unique PAN numbers which trade or which invest in India, and then 5-6 crore more extra on the EPFO side. And that's 20% of India's households now save into stock markets, which is directly out of 10 crore, 8 crores are households, and which is more than 20% of India's households. So effectively, we achieved way beyond what was possible, what was thought feasible. And I think we'll continue to be on that path going forward. If India has to grow, it'll continue to use markets in a more efficient way. And we need to provide those instruments, those risk management frameworks so that systemic risk is taken care of. And individual risk also is taken care of by educating and ensuring that the correct information, timely information is available. But other than that, we don't work with most of the business-like targets.
Rashesh, where do you expect India's market cap to be 3 to 5 years?
I think we're at the stage where what I call the golden age of compounding of India. We are compounding at the same rate we were, but now we are compounding at scale. At a $4 trillion economy or a 5 trillion market cap, we will continue to compound. So I think somewhere between 2030 to 35, I think crossing the a 10 trillion market cap, it will happen. Maybe it will happen earlier, but again, I think it will be
10
part
trillion
of
market cap in how many years?
somewhere around 2030, 32. Now, if you want an exact date, I'll have to consult some astrologers and come back to you. But I think the next 5 to 7 years, going from current 5 trillion to 10 trillion is the compounding rate that India has been experiencing and will continue. However, I must add, and it is actually responsible for all of us to caution investors, this will come with fair amount of volatility. I think last 3-5 years have been fairly, fairly good for everybody. It's very easy to get carried away. We give a lot of weightage to the recent past in our experience or our expectation. But having seen markets over 35 years, I think volatility is part and parcel of this. And that volatility, investors should be ready to experience. And what all investors will need as we go towards India's growth and the next 5-10 years of compounding is to have a bifocal vision to say ye hoega India mein. India will go to 10 trillion GDP also, but it will come with volatility. So keep your one eye on the volatility and being prepared for that, other eye on the long-term expectation of India. And if you can manage the bifocal approach, I think you can get the best of India's opportunity.
Sure. DP, when is the next 10 lakh crore coming? In what time period?
No, that number will happen because more and more investors are coming in, and the same formula compounding. So when the investors are coming in a compounded manner, the markets are doing well. But numbers are numbers. But our job is to create value, get the best businesses in the portfolio of the thing that we will walk the talk. I'm talking on behalf of the whole industry, and the mutual fund industry is walking the talk definitely, if you look at it. And I think the golden period is on, and next decade is ours only.
Sure. Saurabh, you are a little more circumspect about economic circumstances right now. This year, what is your prognosis?
I think as Rashesh said, I think we need to be aware of ups and downs. We've had 3 terrific years after COVID, both for economic growth, earnings growth, and for the stock market. I think we've hit an air pocket in terms of a cyclical downturn. My reading is given that the monetary and fiscal authorities will respond appropriately. I think we'll go through a 3 to 4 quarter pocket of soft earnings and come out of it nicely. But I think that sort of 3 to 4 quarters of more sober market mood is only appropriate and helpful so that people don't get carried away by the terrific last 3 years that we've all had.
Sure. Samir, this year, where we are sitting right now in the market, in terms of probability, is the probability of a melt up higher or melt down?
So first thing is, last 3 years have not been good. Nifty is up less than 13% per annum, and our 20-year is 16% per annum. Even 500 is not materially different from longer term average. We are all harping on the 19 to 21 move. 21, we should have worried about this. So I think in big picture, the fact that you're making 12, 14% return per annum, why are you making? Because you have to accept the fact that it will be negative in many years and it won't smoothly be 12, 14. But any longer period, 5, 6, 7 years, 4 years, it will be in that range. We have done that for 25 years without having all these positives. And main thing what he was saying is right. When you do it with scale, then the world feels left out. Previously, if we did it, they said like a small cap, which goes up, how do we care? Now the pain will be there in case we do well. And this FII flows, I don't think are going to China. I think they are selling from China also. And maybe it's a Trump trade because of high tariffs, this, that. It looks like that because according to some Bloomberg report, even China has had net 14, 15 billion of selling this month. So India's had 8. So it's not going. So this also will work out. Broadly, I am positive because I don't think last 3 years have been as good as we think.
No, but this year, the probability of a melt up or a melt down?
Melt up. I think melt up first.
Melt up first.
Because I am used to some previous years in my life. In 2004, 5, 6, and 7, 4 calendar years, the market was up 40% per annum for 4 years, which is what we call a bull run. Going up 14% per annum, I don't call it a bull run. And it was a bull run for those 2 years. And since then, it's already moderated. Another thing is, if you look at all these funds which have raised a lot of cash, they say the market has gone up a lot. But I went and saw their NAVs. They're in the same range of what they've always done all their life. Why are they feeling that last 2 years are up? Because they see some other SME doing well. But in aggregate, it has been perfectly normal market.
Right. I would agree. Thank you so much. That's all we have time for. Thank you, all of you, for joining us this morning. Thank you so much for watching us. Please hold.
To all viewers.
Absolutely. This is early Diwali celebration at Moneycontrol. Thank you so much.
Thank you.